Page 23. Flexible spending accounts continued. Medical eligible expenses. The following are examples of expenses eligible for reimbursement when they are not covered by a medical, dental, or vision care plan. You cannot claim an expense as a federal income tax deduction if it is reimbursed through your flexible spending account. Amount applied to any medical, dental, or vision plan deductible or co-payment or fees in excess of plan limits. Vision expenses not covered by a plan, including exams, eyeglasses, contact lenses and solutions, optometrist and ophthalmologist fees, and laser eye surgery. Dental expenses not covered by a plan, including cleaning, fillings, and orthodontia, hearing aids, prescription drugs, diabetic supplies, specialized equipment for disabled persons, physical therapy, speech therapy, and psychotherapy, smoking cessation programs, over-the-counter drugs if to treat a medical condition. Medical ineligible expenses. The following expenses are examples of items not eligible for reimbursement through your healthcare flexible spending account. Cosmetic expenses, fees for exercise athletic health clubs, premiums for health, dental, vision, or life insurance, weight loss programs for general health purposes. Dependent eligible expenses. You may claim dependent care expenses for a dependent that lives with you and relies on you for more than half of their support as claimed on your taxes. Dependents include children under the age of 13, persons of any age if physically or mentally disabled and claimed on your federal income tax return. You may be reimbursed for daycare expenses only if this enables you to work or be looking for work, be a full-time student, or be disabled. Examples of eligible expenses for reimbursements. Care for a child under the age of 13 at a day camp, nursery school, or private sitter. Care for an incapacitated adult who lives with you at least 8 hours a day. Page 24. Calculating flexible spending accounts. The Healthcare and Dependent Care Flex Spending Account worksheets on page 24 can help you decide how much you want to contribute to each account. Page 25. Retirement. The Texas Municipal Retirement System, TMRS, provides affordable, sound retiree benefits to meet the needs of employees and their families. At the City of Farmers Branch, full-time employees and those part-time employees who work in a position requiring 1,000 or more hours per calendar year are required to participate in TMRS in lieu of Social Security. Credit for your service. In general, you earn a month of service credit toward retirement for each month you are employed in an eligible position. Each spring, you will receive an annual statement from TMRS listing your total service credit and your account balance. Vesting. Vesting means you have worked enough years and established enough service credits to meet the minimum length of service requirement for retirement. At the City of Farmers Branch, you become vested after 5 years of service credit. Once vested, you may leave your deposits with TMRS and retire with a TMRS retirement benefit when you reach age 60. Your beneficiary. Your beneficiary is the person you choose to receive payments from your retirement account if you die. Retiring. At the City of Farmers Branch, employees can retire when they meet one of the following criteria: 5 years of service credit and are at least age 60, or have 25 years of service credit at any age. Page 26. Retirement continued. Voluntary Deferred Compensation Plan. The Hartford. A deferred compensation plan permits you, on a voluntary basis, to authorize a portion of your salary to be withheld and invested for payment to you at a later date. These salary deferrals, or contributions, are allocated to the plan's investment choices at your instruction. Neither your contributions nor any investment earnings are subject to current federal taxes. Taxes become payable when the deferred income plus earning are distributed to you, generally at retirement or a separation from employment. Retirement Health Savings Plan. RHSP, the International City County Management Association Retirement Corporation, ICMA-RC. The City of Farmers Branch has established a mandatory retirement health savings plan, RHSP, through ICMA-RC for employees hired as of January 1, 2007 to assist in paying for health care expenses after they leave the city. This health savings plan allows employees to accumulate assets on a tax-free basis to pay for items such as health care premiums, long-term care premiums, co-pays, co-insurance, deductibles, prescription expenses, and other out-of-pocket health expenses after leaving the city. Page 27. City of Farmers Branch Health Plan Summary Notice of Privacy Practices, HIPAA. This notice describes how medical information about you may be used and disclosed and how you can get access to this information. Please review carefully. Page 28. Coverage after termination, COBRA. This notice contains important information about your right to COBRA continuation on coverage, which is a temporary extension of coverage under the plan. This notice generally explains COBRA continuation coverage, when it may become available to you and your family, and what you need to do to protect the right to receive it. What is COBRA continuation coverage? COBRA continuation coverage is a continuation of plan coverage when coverage would otherwise end because of a life event known as a qualifying event. Specific qualifying events are listed later in this notice. After a qualifying event, COBRA continuation coverage must be offered to each person who is a qualified beneficiary. You, your spouse, and your dependent children could become qualified beneficiaries if coverage under the plan is lost because of the qualifying event. Under the plan, qualified beneficiaries who elect COBRA continuation coverage must pay for COBRA continuation coverage. If you are an employee, you will become a qualified beneficiary if you lose your coverage under the plan because either one of the following qualifying events happens. Your hours of employment are reduced, or your employment ends for any reason other than your gross misconduct. If you are the spouse of an employee, you will become a qualified beneficiary if you lose your coverage under the plan because of any of the following qualifying events happens. Your spouse dies, your spouse's hours of employment are reduced, your spouse's employment ends for any reason other than his or her gross misconduct, your spouse becomes entitled to Medicare benefits, or you become divorced or legally separated from your spouse. Your dependent children will become qualified beneficiaries if they lose coverage under the plan because of any of the following qualifying life events happen. The parent employee dies, the parent employee's hours of employment are reduced, the parent employee's employment ends for any reason other than his or her gross misconduct, the parent employee becomes entitled to Medicare benefits, or the parents become divorced or legally separated, or the child stops being eligible for coverage under the plan as a dependent child. Page 29. Coverage after termination, COBRA, continued. How is COBRA coverage provided? Once the plan administrator receives notice that a qualifying event has occurred, COBRA continuation coverage will be offered to each of the qualified beneficiaries. Each qualified beneficiary will have an independent right to elect COBRA continuation coverage. Covered employees may elect COBRA continuation coverage on behalf of their children. Disability extension of 18-month period of continuation coverage. If you and anyone in your family covered under the plan is determined by the Social Security Administration to be disabled and you notify the plan administrator in a timely fashion, you and your entire family may be entitled to receive up to an additional 11 months of COBRA continuation coverage for a total maximum of 29 months. The disability would have to have started at some time before the 60th day of COBRA continuation coverage and must last at least until the end of the 18th month period of continuation coverage. Second qualifying event extension of 18-month period of continuation coverage. If your family experiences another qualifying event while receiving 18 months of COBRA continuation coverage, the spouse and dependent children in your family may get up to 18 additional months of COBRA continuation coverage for a maximum of 36 months. This qualifies only if notice of the second qualifying event is properly given to the plan. Throughout the rest of this benefits guide, you will find contact information and a glossary of terms. Now that we have reviewed city benefits, you will be meeting with an HR rep to answer any of your questions. We look forward to your success at the City of Farmers branch.